How goes it all? Welcome back to Patterson Properties. Hopefully, you guys are having a great and exceptional day. Take these headphones out. There's been a growing trend of multiple housing markets being impacted by a multitude of real estate investors since the pandemic started back in March 2020. We all know this, we've seen it, and it's very interesting. However, according to an article that I read today, Phoenix, Arizona investors had a significant impact on the housing market in April of 2021, taking away about 429 units of inventory. Nationally, investors took more inventory off the market than they contributed in April, with their purchases representing 5.7% of all home sales. Now, people are starting to see a little bit of a slowdown when it comes to those home sales because you have a lot of people that are saying the housing market's too crazy, it's too expensive for me to buy. You still have a lot of people say, hey, I'm not moving. I don't think, and then with school being back in session now, throughout most of the country, and with fall upon us and then winter will be here, I see the housing market slowing down 10 times more because, hey, during Thanksgiving, during Christmas, during the school year, a lot of people, for the most part, especially the single family homeowners, are not really looking to move to a new home or whatnot. That's just usually what it is. Like before the pandemic, that's why I was able to get better deals from home sales, from finding investment properties and whatnot, because I would usually buy my properties between January and April during those time frames, because usually most people are not looking to buy a house or sell a house and whatnot. So when the home was on the market, this was like before the pandemic, there weren't bidding wars like you've seen now. Homes, that should be selling for 200,000 end up selling for 500,000, but that's neither here nor there. Even into this day, in today's, with the lack of houses across the United States, it's growing at a huge rate. And before I even go forward, lots of people are moving to the state of Arizona from all over. People leaving the West Coast, leaving Washington State, Oregon, California. Also, big chunks of people are moving from the cold Midwest, especially states like Wisconsin, Illinois, Michigan. That little triangle up there, because of the great weather and, of course, the awesome job opportunities within the Phoenix metro area. It's Phoenix, Arizona has become a big transplant city, just like Washington, D.C., Dallas, Texas, Austin, Texas. A lot of people don't realize that, but I think Phoenix has been like that for the last 10, 15 years. The article also stated that today's buyers are facing a tough market, and data shows that they aren't just competing with each other. With deep pockets and more flexibility, investors can be daunting competition for the typical home buyer. Right now, data shows investors are buying more homes than they are selling. And while they get a lot of attention in today's market, it's worth remembering that they can also contribute to inventory levels, which was stated by Chief Economist Daniel Hill. Whether a market is appealing to investors depends on a variety of factors, including how local home prices compare to rents. When home prices are rising and rents are more stagnant, investors are more likely to sell off properties and contribute inventory. And this is true because as an investor, if you're not getting a bang for the buck, then why are you going to hold the property? It just doesn't make sense. And if it doesn't make dollars, then it doesn't make sense. On the other hand, the higher rents are compared to home prices, the more attractive the market is. The investors looking to buy homes and convert them into rental properties. And a lot of single family homes in today's market are being bought as unseen for crazy prices, whether it's a regular home buyer, investor, or a major corporation. I've been to there might as well be home auctions, but I've been to open houses where a bunch of investors just went in and made an offer immediately without even really seeing the property. And, and the bidding war just literally raged on. It got to the point where they had to start having the bidding wars online because people were getting into fights and altercations, things of that nature. So it's pretty crazy. Another thing that people are seeing in today's housing market is a growing trend of single family rental property neighborhoods. The article also stated that investors took away inventory of 31 of the largest U.S. markets, led by Phoenix investors, minus 429 homes. Charlotte, North Carolina, minus 287 homes. Miami, minus 256 homes. Tampa, Florida, minus 224 homes. And Chicago, minus 221 homes. Compared to the markets where investors help buyers, these metro areas are smaller and less crowded, with more available home listings relative to all households, lower home prices, and relatively higher rental growth. In April 2021, investors added to the number of homes on the market in 19 of the 50 largest U.S. metropolitan areas, i.e. Atlanta added 399 homes. Dallas added 239 homes, and it makes sense because those are two cities that people have been moving to at alarming rates. I won't say alarming, but at a gigantic rates. People have been moving to Atlanta and Dallas within the last couple of years, and it's intensified within the last 3 years. But I'd say the last decade, from 2010 to 2020, it's been a huge influx of people moving to these areas. The pandemic intensified it even much more so. Baltimore actually added 188 homes because a lot of people have been buying for a decade. They've been buying homes in Baltimore for cents on the dollar or zero or nothing, and doing the fix and flips and buying holds and all that good stuff. Los Angeles actually added 120 homes, and San Francisco added 93 homes, seeing the biggest contributions. Now, to me, the numbers, that's not a lot because there's been such a housing slump when it comes to building new homes, and there's still a national housing craze going on. But places like Baltimore, Los Angeles, and San Francisco are either in horrible conditions when it comes to real estate, or most regular 9-to-5 working people cannot afford to live there anymore. But do not sleep on the city of Baltimore and Maryland, because like any other city, it has its good parts, it has its bad parts. And despite what the media may say, people are buying up homes and fixing, flipping them, making the city look better like that. So if you're interested, check Baltimore out. It might be a place where you want to live or a place where you want to invest. Think about it, do your research, and go from there. Now, markets like Dallas and Atlanta, as I said earlier, come to somewhat like the Washington, D.C. area and Los Angeles area when it comes to affordability, excluding high income state taxes. However, before I even go further, if you're moving to Atlanta, if you're moving to Dallas, Texas, I will say this: beautiful cities, love them, got nothing bad to say about them. But cost of living is rising, and it's not meant for basic people that just want to have a regular 9-to-5 job and doesn't know the principles of wealth when it comes to saving and investing, insurance. The list goes on and on. So just throwing that out there. Just because you can live in a cheaper state does not mean, in today's world, moving to a cheaper state doesn't mean nothing if you're in a major metropolitan area, because things are happening there. Areas are growing, areas are expanding, and the basic people are not going to be able to afford to live there anymore. Just keeping it real. All right. The article ended on this note: high home prices, slower rent growth, and uncertainty over the future of work in these markets are likely causing investors to reevaluate their property portfolios in these areas. And with homes still selling quickly, even in these metros, an investor deciding to sell can look forward to being able to reposition their dollars elsewhere in a very short period of time. Especially cheaper markets within the Midwest, like Indiana, Ohio, Pennsylvania, which, if you know me, Pennsylvania, that's my main stomping grounds. Between Pennsylvania and Baltimore, Maryland, those are the areas that I like to buy my rental properties and wholesale properties that I win in tax lien auctions and things of that nature. All right. Because that's the business of Patterson Properties. We purchase properties via tax liens, and we wholesale them to investors. With Patterson Rental Properties, we actually put the rental properties in the LLC's name with Patterson Rental Properties. That's our business and whatnot. We do the marketing, the campaign thing, not as intensively as most wholesalers do, because I'd rather be able to just buy the home myself and get it. But a lot of people like the no money down aspect of wholesaling. There's nothing wrong with that. Hey, everybody has an opportunity to have a win-win situation. And not only that, able to help other people that are in distress so that they can get rid of a property that they can no longer afford, or a property that they don't need, or a property that they just don't want. So on that note, if you're an investor, if you're a wholesaler, contact Patterson Properties. We'd love to work with you. We can always learn something from you, and I'm sure you can learn something from us. All right. Do great 3 free things: like, share, and subscribe. Have a great day. And as I always say, make money move, so you're going to live broke like a fool. Take